Two neighbors filed the exact same $42,000 fire damage claim on the same street the same week. One insurance check covered every dollar of it. The other came back $27,300 short, and both of them thought they had full coverage. Same duplex layout, same kitchen fire cause, a grease fire that spread to the cabinets, same 12-year-old appliances and cabinetry on both sides. Same contractor walked both units and quoted the identical $42,000 to repair. On paper, these are the same claim filed twice. The difference wasn't the damage. It was two words buried in each declarations page. Neighbor A's policy paid replacement cost, what it actually costs today to replace an item, full stop. Neighbor B's policy paid actual cash value, replacement cost, minus depreciation for every year that item has aged. Run that through the same $42,000 loss. Neighbor A's replacement cost policy pays the full $42,000. That's the whole point of the endorsement. Neighbor B's actual cash value policy starts at that same $42,000. Then the depreciation formula takes over before a check is ever written. Here's what that depreciation formula actually does to a 12-year-old kitchen. Insurers assign every category, cabinets, appliances, flooring, a useful life, then subtract a slice of value for every year that's passed. By year 12, that $42,000 kitchen is only worth $14,700 on the insurer's books. That's the number the check gets written from. Laid out in full, $42,000 to actually repair the kitchen. 65% depreciation applied for age. $14,700 is what the actual cash value check pays. That leaves a $27,300 gap, and neighbor B has to cover every dollar of it out of pocket to get the same kitchen back. This is the part almost nobody reads until it's too late. Your policy never promised to make you whole. Full coverage is a phrase agents use loosely. It isn't a legal term, and it says nothing about which of these two payout methods you actually bought. And it's not just fire. A 15-year-old roof, wind damaged, costs $18,000 to replace. Under replacement cost, that's the check. Under actual cash value, most roofs are considered near the end of their useful life. By year 15, the payout drops to $5,400. Same peril category, same pattern, a completely different product. Here's the number that actually matters. A replacement cost endorsement typically adds well under $100 a year to a policy. 5 years of that upgrade costs about $400 total. One actual cash value claim, like neighbor B's, cost $27,300 in a single afternoon. The insurance you skipped to save $80 a year is the same insurance that would have closed that entire gap. 3 things to check before you ever need to file a claim. Read your declarations page and look for the words actual cash value next to your dwelling or contents coverage. Ask your agent whether a replacement cost endorsement is available. It's usually a small add-on, not a new policy. And photograph and date what you own now, because a depreciation dispute is won or lost on proof of age and condition collected before the loss, not after. Watch our breakdown on umbrella insurance next to see the other coverage gap most people never check. Subscribe for weekly money concepts explained simply.